the Kenyan Bankers Association fails. My members need to know what is happening. And for me, that is the pride to be part of that association. So we're also glad to partner with you. And we look forward to sharing insightful things about this emerging space.
All right. So thank you so much. I'll start by introducing myself, then probably I'll just welcome my colleagues also to introduce themselves, then as we shoot straight to the agendas for today. As Kennedy mentioned, I am Say Wycliffe, and I'm a blockchain forensic specialist, and also the managing partner for A&D Forensics East Africa. I am currently operating from one of our offices based in Kenya, which is one of the regional branches that we have across the continent, where we are basically committed to driving blockchain forensic services and also virtual assets compliance solutions. So I think with that, allow me to welcome my colleague Chioma, also to introduce herself, even as we proceed. Thank you.
Thank you. So, good morning, everyone. My name is Chioma Onyekelu from A&D Forensics, headquarters here in Nigeria. I'm a certified cryptocurrency investigator, a blockchain forensic specialist working at A&D Forensics, and a certified cryptocurrency compliance specialist, also a certified anti-money laundering specialist. So it's a pleasure to be here, and I look forward to learning even in this call. Thank you so much. Okay, so I think Mr. Deji should introduce himself, and then we'll go back to the KBA.
Okay, so good morning, everyone. I was waiting for KBA's welcome address, but it's good. Maybe we do my intro, then maybe chain analysis, then we hand it over to the Kenyan Bankers Association for welcome address, and we can kickstart the presentation. So my name is Adeji Onibi, and I'm a senior partner at A&D Forensics. And for A&D Forensics, we help financial institutions like what we're having today with training to understand compliance, to also understand digital asset risk. And we also run one of the, maybe I will put it that one of the largest crypto forensic lab, where we assist law enforcement, we assist banks in case they have any infraction that needs some diligence forensic investigation. We're currently working with few banks across the continent of Africa, and helping some of them investigate cryptocurrency fraud that happens within their banking system and eventually find its way to cryptocurrency. One of such banks that we're supporting is one of the oldest bank in Nigeria, about 130-year-old, First Bank. And we're also helping out with Equity Bank in Kenya to just look at those infractions that have happened. And I think that's the summary. We conduct trainings when it has to do with compliance for different financial institutions, compliance officers of fintechs, compliance officers of cryptocurrency exchanges. And we also run cryptocurrency investigation courses. And we do that with law enforcement. We do that with the Interpol. We have done that with DCI in Kenya. We've done that across the African law enforcement. We are having some with the Ugandan law enforcement officers in a few days. So in summary, that is what we do, and we look forward to a very fruitful deliberation today. So with us here is a very strong partner, and that we've been working with for many years. And the company is called Chain Analysis, and I will hand over to Mr. Philip to actually introduce himself at Chain Analysis.
Thank you, DG. Yes, so hello, everyone. Good morning. My name is Philip. I head Chain Analysis operations across both public and private sector, and then also lead a team that works in the financial services in the UAE. I've been in Chain Analysis for a couple of years. Initially started from the Nordics, where I was largely working with financial institutions in the Nordic region, so Finland, Sweden, Denmark, and Norway. As DG has mentioned, I think we'll go a bit deeper into the presentation later. So Chain Analysis works very closely also with banks across the region, and also largely with regulators across our region and also globally. So I'll hand over to, I think, the KBA, and then we could just continue with the discussion. Yeah, thank you.
Yeah, thank you, Wycliffe, and the team from Chain Analysis. We really do appreciate this partnership between yourselves and us. We do recall that we met during the SMLAG forum way back in August, and that's where we started this conversation. Just to give you a brief background about the KBA. The KBA is the umbrella body for the commercial banks in Kenya with a membership of 46 banks. These are both commercial banks as well as the microfinance banks. And in terms of the operations of the association, we do work through various committees, and one of the committee that is leading this engagement is the compliance committee, which has a mandate of supporting the compliance practitioners, particularly on the areas of money laundering, as well as other risks that are prevalent in our system and landscape. So for us, we do want to get insights from yourselves on this aspect of cryptocurrency, as well as the virtual assets. It's an area where we have a big challenge, considering that we don't have legal framework that can support banks in terms of monitoring and managing this risk. And we've had, of course, challenges in managing proceeds from the cryptocurrencies as well as virtual assets. So on the basis of that, we would like then just to get insights. One of the key mandate of the compliance committee is to provide the banks in regards to supporting training as well as building capacity in various areas. And we do undertake this mandate with various stakeholders as well as partners. Hence the reason why we've been working with Wycliffe to see how we can then organize this webinar for the purposes of sensitizing and creating awareness for the bank practitioners. So we really look forward to engaging with you. I want to believe this is just a start of our engagement, and as we go along, as we develop the various legal framework relating to the virtual assets, then your expertise and knowledge will become handy in terms of supporting the banking sector in understanding this vice. So once again, thank you. I want to believe there are a number of participants who are on call. I'm not able to see who's there. Otherwise, I would have invited the chair as well as the vice chair of the KBA compliance committee also to say one word also. But I guess as we go along, if I'm able to identify them, then maybe at the close of the session, we can invite them to also make some remarks. Otherwise, thank you very much, and over to you, Wycliffe.
All right. Thank you so much, Mr. Kennedy, for the remarks and sharing about KBA. Allow me just to introduce Mr. Deji. I will be picking it up from there. Welcome, Mr. Deji.
Okay, thank you very much. Is my screen visible?
Yes, I can see your screen, Adeji.
Okay, so that's great. So thank you, everyone, and good morning. And we are going to make it very brief. I think I have about 15 to 20 minutes to do this, and so I can hand over also for the practical session of what it looks like to do digital asset compliance within the bank, and also save our ecosystem within the banking sector of any risks, and that has to do with digital assets. So I want to comment with a quote. Incidentally, it's attributed to me, and I normally do this. I like putting these quotes in the beginning of any compliance and, if you may, training that we like the one we're having. So a bank's failure to prioritize cryptocurrency risks and compliance isn't just a regulatory oversight. It's not only seen as negligent, it is a direct threat to its reputation, operations, and customer trust. In an era where digital assets fuel both innovation and crime, banks must act as vigilant gatekeepers to safeguard the financial system from being exploited for money laundering, sanction evasion, and fraud. And of course, I want to say the Bankers Association in Kenya and the banks here are not the people I'm talking to here, because again, you have prioritized cryptocurrency risk and compliance, and maybe the most reason why we're doing this talk. So based on our schedule, we want to also work strictly with what we have in our on timetable. Is first starting with the intro to the jargons that we do, many few things that we know within the cryptocurrency ecosystem. So let me begin with defining digital asset as a digital representation of value that can be digitally traded. This can be digitally transferred, and it can be used for payments, or it can be used for investment like we currently see it. And this definition is completely favored by the Financial Action Task Force to what a digital asset is. And when you look at the digital asset, and here I want to use the arrowhead, which is Bitcoin, to actually begin to distill some of the jargons that we've heard over the years. But it makes sense for us to understand this, albeit it is an intro class, and to just know how this digital asset works, and then we can take it off from there. So one major characteristic of this is that it is a decentralized kind of currency, meaning it is distributed across different places. It's not held in one central location. And I think some few weeks ago when I was giving a kind of training to one commercial bank, and I gave them example of having their central server that services the financial operations has just been domiciled in one place. And I give example, maybe you just have one server in somewhere in Westland, for example, in Nairobi. And if anything happens, the possible thing is that your network is down. And then there's a specific place you go to and you work on your server, and maybe if you have a backup, maybe somewhere also maybe in a different location. But this particular one have it all over the world, and each one of them simulate data, in the same sequence, same time, duplicated across this whole database. And as you do transactions, it just sync with all the database, and it agrees within the database that you have that kind of money you want to withdraw, and then they can be approved across this network for it to happen. So it is not held in one place. It is decentralized in different places. So another key thing to it is that it is open source, meaning the code that controls this is open to every developer, everyone to see it and see changes that are made on it. Another very clear one is that it is math-based. So it is clearly just a mathematical formulas, mathematical computation, and that is what build the trust, within this whole ecosystem. So if you may, you see some very, believers in this new technology. They say in mathematics we trust, and not in one central power, not in one central government. In mathematics they trust. Most of those people that believe in how this technology works. For Bitcoin, it's not the kind of money that you can print at will, that can continue without limit, printed anytime there's any kind of money that fuels inflation within different economies. This particular one have limited supply of 21 million that will ever be printed. And so that is what we're seeing with fueling, the kind of price spikes that we see in the likes of Bitcoin, where the supply is reducing, more demand is coming into it, and it's just a normal common demand and supply law. So as the supplies are reducing every 4 years, because every 4 years the supply of Bitcoin is reducing. From 2009, when any miner confirms, transaction within or validate transaction, they are rewarded with 50 Bitcoin, which is every 10 minutes, which is a way to actually get it into circulation. So we call it like the minting process for these assets to come into circulation. So 50 Bitcoin for every 10 minutes of anybody that's able to confirm transactions, and it goes. And after that 4 years, it was cut by half to 25 Bitcoin that will be shifted into circulation. And like that, After 4 years again, it went to 12.5, like that, every 4 years. And the last one that happened in 2020 during COVID, around May. And now this is another 4 years, which is 2024. The supply has also been cut to half. It will continue in that series until the year 2140, when the supply of the 21 million Bitcoin will cease to increase, and it will just come to a stop, and everyone will scramble to have a particular unit, or what we call Satoshis, of what makes a Bitcoin. It is borderless, we know, and of course that is why the risk to us is very massive. So it is easier for you to contain customers that you have within Kenya, and you know they are within Kenya. You can do address verification within Kenya, and today you wake up to a technology that is completely borderless. And for us, within the compliance and risk segment of this digital asset, we think that's a pain point. That is what is giving sleepless nights to Financial Action Task Force, because the borderless nature of this is believed to have the capability to fuel money laundering more, to fuel terror financing, and all other illicit activities that can happen within the ecosystem. So most of these characteristics is what it is believed to be the fundamentals of this digital asset. So most of the proponents believe that it is sensor resistance. So meaning you can't stop it, meaning you can freeze it, meaning you can seize it from people. But that's an illusion that we in any seminar like this, or maybe any training to law enforcement and also bank and financial institutions, we tell them that is a myth that has been broken by companies like Chain Analysis and the likes of what we do at A&D Forensics, to say it's actually not censorship resistance in that manner. Yes, you may say, but if there's a need to get to the root of anybody using anything, it is possible. And then, just like we talk about mass-based, it is secured by cryptography. So meaning there's some mathematical computations, and what we call the evidential integrity to most of the things that happen is used within the cryptography field to actually secure it. So meaning it's just a lot of security that ensures that who needs to see what or have ownership at a point is guaranteed to have those ownership. So in cryptography, mostly is just a way to hide information and transmit it to the other one. In First World War, Second World War, we used to have the Enigma machine, where the German military, when sending messages, they know how to actually encode that message, and it can only be decoded by people that have authority to actually decode that. And so that kind of technology is also embedded within the cryptocurrency or digital asset space, where the people that needs to have ownership only have ownership, and whoever sees it has to be given permission, what we call the private key, which is now your power to actually have control, and the public key that you give to people for them to be able to interact with all those addresses. A lot of people also have this myth that digital asset is pseudonymous. I mean, it's anonymous, and we think and believe that it's pseudonymous because there are attributions that can be done to those digital assets, and you can know who is actually behind it, which is a very fantastic job Chain Analysis have actually done over the years on this one. So what are the risks that you should be concerned about as a financial institution? One, of course, at the top of this list here is money laundering. And the last check, money laundering within cryptocurrency or digital asset, within just 2024, few quarters back, we've been able to record about 23.8 billion US dollars that have gone and been washed through this funnel, using cryptocurrencies. And so that is why we think we have to examine the banks for this risk. And you have to also be concerned that, do I have districts within the financial system that I operate as a bank? And of course, it is your responsibility to make sure that your financial institution is not used as a conduit or pipe to wash dirty money, whichever way. Is it crypto? Is it normal fiat? Whatever it is, under any guise, you should be aware that your financial system is being used. I challenged some few banks that told me, oh, we don't really do crypto. We don't have any crypto customer, and if you say anything crypto, we normally shut it down because of the risks. And unknown to them, after deeper examination, we discovered they're actually part of the people facilitating crypto activity within that jurisdiction. And so for you, you possibly will not know if you are or not, because the risks that you don't know you carry, and as risks and compliance officers of your bank, it is the onus on you for you to be able to elucidate that further and to know and be sure that your bank is actually clean and not facilitating this kind of transactions. And we'll be hearing more about that from chain analysis when they come to actually show us what the capability of the tool they have is and how we can actually look at that. For scams, is not too massive, but the record we were able to see was for the first half of 2024. And we've seen over $1.4 billion have been attributed to different scams using digital assets, which is very faster. Remember, it is borderless. Terror financing, there's an estimate of about $80 million globally that have been channeled through this. And I reckon very strongly for Nigerian government to say this is an aspect. For example, a few years back when I was speaking to a particular military formation, and we call them the Nigerian Army Cyber Warfare Command. So it's a command of the Nigerian Army that is having the mandate to secure and protect the cyberspace of Nigeria against external attacks on the cyberspace, and also carry out offensive to countries, that maybe have some disagreement with Nigeria on the cyberspace this time. No guns, but just computers and codes to fight them. But also speaking to that Army command, I made them understand that as much as you fight this and taming terror financing using the financial institutions, what have you done to actually make sure you're on top of your game when it comes to digital asset, mitigating terror financing using digital asset or cryptocurrency? And I found there's a lot of gaps around that. And we did a lot of simulations, and they saw the risk where individuals can have hardware wallets and you can transfer this to the terrorists and they can buy whatever they want with those digital assets without funneling through directly, if you may, to the financial institutions. But the financial institutions are used as a gateway to actually cash out, as a gateway to reach some few people locally. And those risks are the risks that financial institutions must be interested in knowing how this evolve. Sanction evasion, for example, countries like Russia, countries like Iran, they use digital asset most time to evade, the sanctions upon them. And of course, those sanctions, when it's evaded and they have reasons to buy something in Kenya and they send such monies to Kenya in digital asset, and your bank is used to off and on ramp within those systems without you knowing, your bank is somehow culpable within those whole issue. And we must be able to actually have a clear picture if that is happening at all within our daily operation. Also for ransomware, and that also for the first half of the year, it's about $400 million that we've seen. And a single payment, we saw over 75 million of that happening, according to reports that are out there. Darknet market, over 1 billion of illicit activities. And of course, child abuse materials, which we are seeing now is tens of millions. Drug trafficking, about 600 to 800 million primarily to darknet market. But these are funneled to individuals, to different places, across different exchanges, different WhatsApp group, different Telegram group. But I can bet you that often than not, these whole rails are cashed out from the banking system as we have it today. I was having a little bit of dive just last night to see how many of these banks in Kenya do we have that people are using in and out every day, using digital asset through those banks without the bank's direct confirmation or direct acceptance that this is happening. And I saw a couple of banks, a lot of them that people do daily transactions free. And they can cash out their scam money, they can cash out all those activities. The bank awareness that this is happening within their banks. I actually was at one of the banks some months back in Nairobi, myself and Wycliffe, and we're talking to the compliance lead of that bank, and he said, we don't do anything crypto. We don't know it, and for that we just stopped it. And so I looked at Mr. Wycliffe, and we looked at ourselves and we just laughed. Why? And there we went to one of the popular crypto exchanges, and here is a bank fully being traded by different kind of people. using that same bank to buy and sell cryptocurrencies. And here the compliance officers of the bank just confirmed to us that we don't do crypto. And so we just saw it that minute. So those are the kind of awareness that this training is trying to elucidate, so we can also see those risks and see as a bank what do we need to do and to actually make sure that our banks are not used as a gateway to actually facilitate all these financial crimes within the cryptocurrency. Of course, hacks are happening, and here we can see that including state-sponsored hack by the likes of Lazarus Group of the North Korea, and a lot of state-induced and other hacking groups have been able to siphon over 1.58 billion US. And I can tell you for free that this will are funneled to different financial institutions to be able to liquidate them. Because again, most countries and most activities that these hackers want to do are not things they can do using cryptocurrency. So they still need the traditional financial institutions to actually be able to cash out these profits that they are made out of the illicit activities. So of course, then we have, this is very massive, the number 10. And for me, and this is very clear and very concerning to the banks as I see across Africa. So I've had interaction with banks in Nigeria, I have interaction with banks in Ethiopia, and now we're having with Kenya, we've had few in Ghana. These are all areas that is completely, the banks and the financial institutions are completely in the dark. So they're serving a lot of customers that are doing over-the-counter transactions using cryptocurrency. We call them OTC, P2P transactions, all that. And that is where the massive amount of transactions across countries happen. But again, banks are not aware that their platforms are being used by these OTC traders, by these P2P traders, you know, because you don't have a way to see it, because you're just dealing and you just see, what you're able to see as a bank is just your customer moving money to another customer somewhere, which is normally what the business you're open to do. But behind the scene, a lot of activities are happening using digital asset, cryptocurrencies, and those are risks we think the banks should be able to know. I was speaking to the central bank in Nigeria, and I told them for Nigeria to have been able to do over 60 billion US dollars across 12 months in digital assets, who can tell me within the central bank where these monies have gone to? Terror financing, money laundering, who are the actors? And the central bank does not have the answer. Why? Because instead of giving out frameworks, giving out guides for the banks to see how they can interact, the central bank simply in 2021 asked the bank to stop anything they are doing in dealing with cryptocurrencies. So prior to that time, the banks have all their customers, they know who is doing what, they know how much is moving to cryptocurrency in and out, and those data can be called by the central bank to do some analysis. But the moment they make that pronouncement, everything went under, and then the transaction within the country shot, you know, up to 60 billion, and this time without visibility. And I told the central bank, you actually created this monster. And so we have to look for a way to quickly see how we can mitigate and stop, be able to give some direction. And that was how we got the central bank to actually send circular to all the banks in Nigeria, for example, to say, hey, deal with crypto, but these are the guidelines on how you can open an account, this is how the guidelines, how you can deal with them, so they can have this visibility. Because when you shut them down, you say, hey, don't touch them, then everything goes under and you don't have visibility to activities. And it fuels more criminality than you trying to mitigate those risks by just saying, stop, we don't know it, and we're not going to learn about it, and we're not going to do anything about it. Just stop and don't deal with it. And it's not going away anyway. And of course, final is a lot of what we call ICO, which is initial coin offering, which is like an example of what we have by what we call the initial public offering, where people sell shares to the public. This one, people sell tokens to the public. So in this, there's a lot of promises to buy our token, you're going to make a lot of money, only for that person to actually just close shop, rock pull everyone, and just close and use the money for himself or herself. So how do you, as a traditional financial institution, actually do what we call risk checks? And I won't dwell with this because, of course, chain analysis, we'll be talking about how you can do those risk checks and all those issues. But if you look at how you interact, you know, with digital asset today, is you as a bank, a lot of people move money out of your bank to different channels, accounts, credit cards, you know, account to account, and all those issues. And of course, people deposit money via wire, from transfer, from M-Pesa, from whatever channel that is there. And they move this money, swap it within cryptocurrency exchanges, and they allow you to purchase digital assets for fiat payments. And those fiat payments are actually powered by your own financial infrastructure within different banks. And so this digital asset they swap them from cryptocurrencies to those digital assets, and the digital asset back to Kenyan shilling in different wallets, in M-Pesa wallet, in their banks, and all those issues. Within those movement, you find a lot of darknet activities, trafficking, terror financing, all those, and they are not things you can actually pick as transactions go on. And so this webinar today is trying to expose you to how you can actually be able to pick, those things in case they've passed through your own financial institution. So there's a lot of aspects that we think you should be concerned about. Of course, the AML about those ones, monitoring, constant monitoring about those transactions, monitoring on what is happening. These are not things you can do with your bare eyes. They are things that you use some tools to actually support your compliance activities within your bank, and most importantly, also for you to be able to train yourself. So I want to end this presentation. We're giving you 4 levels as propagated and pushed out by chain analysis recently, to say for any bank that want to make themselves prepared, and this is for me, I want to say congratulations and kudos to Kenyan Bankers Association for taking this step, because this is a natural step that need to be taken now that this is getting mainstream. BlackRock is getting to it, Deutsche Bank, HSBC, Standard Chartered Bank, Citibank. Most of these banks are moving in, custodying these digital assets, bringing out new products for payments, for stablecoin support, and all that. This is the time for African banks to learn what we need to do. So the first step, which is like level 0, and that is where we are, to be honest with you, where we are is education, and also doing some strategic planning on how you can confront this risk that is imminent before you, based on the kind of activities and business that you do. So there's a new money in town, then there's a new way to actually learn on how to tackle the risks that will come with this new money that is inevitable, that is already with us. So one is to designate 1% or 2% within that bank to continue to look at how the space emanates. And that person interacts with experts, interact with all the things the bank can do and prepare. And one of the greatest things is to actually do what we're doing now, do a lot of training, expose your people, your staffs into all the activities that is happening, and do some preliminary analysis of the risks that may be available or present within your current operation. And that is what channelers will be telling us. I think also we have, for the people attending, I think we have also some kind of a free proof of concept within your bank. We pick the transaction, we run it through all the risks that are available, and those are done one bank to another bank individually, using those tools to actually be able to see with the support of the compliance and the risks of those banks. And that will be spoken to very fully when chain analysis comes. Then, of course, the second level is to allow, which we are already doing now, but we have not done the first level, allow retail banking customers to send funds through our bank to crypto exchanges. And it's happening now completely. If you go through the apps, you see the list of your bank, and the chances are almost 90-something% that you're going to find your bank within those crypto apps. And so we've jumped the 0 level and we've moved into the open for business. But of course, that's not officially done. And so for you to officially do it and allow retail customers and for you to be open to business, you will have to take all the risk analysis from level 0, also learn the landscape by training yourself, preparing yourself for crypto compliance and crypto risks. You do basic trainings for people that are responsible. Then you can move to level 1 and say, oh, I'm ready now to take in retail customers. I'm open for business banking service for crypto businesses. And because those ones have a lot of risks, I think a few weeks ago, we were teaching one of the banks. So we taught the banks compliance department, risk department, investigation department, and IT. And what we're telling them is that for you to be able to get ready to bank crypto businesses, these are the things you must understand, that you must put those plans in place for you to be able to serve those people. And we went through that with them, and we were able to see how they can onboard those people, which risks those people also pose, because they can layer some other businesses that are not their own businesses, and a whole lot, that are happening. So you can build synthetic products. You can enable crypto deposit in level 3, and then beyond all those enabling, then you can now do crypto payment services using stablecoin, issuing your supporting stablecoin services, crypto reward, credit cards, and the like. And now we have MasterCard, Visa playing very big role in this. They are fully in it. I've spoken to the crypto team at MasterCard and severally, and they are doing a lot of innovation that has to move. And for financial institutions to remain competitive, they have to also up their game to be in this same terrain. So I want to anchor here. Thank you very much for the time, for the listening to me, and I want to hand over to the team at Chain Analysis to actually continue this. Thank you very much for listening.
Hi, DG. Am I clear?
Yes.
Okay. I think we have a question from someone. Solomon. Solomon has a question for you, DG.
Okay.
Thank you, DJ. My question is on OTC, illegal MSBS. I don't know if you can hear me or
yes, very clear, Solomon. Very clear.
Thank you. I needed you to expound on OTC and P2P, where you had indicated that some banks actually are in the crypto business and they're not aware. If I jog my memory, in our last conversation, this issue again came up. So I really wanted to have a clear view of that specific one so that we do not get into darkness and thinking we're in the light. Thank you.
Thank you very much. So I think this your question, Solomon, directly will be answered by Chain Analysis, because that is what it's trying to show us how you will know that you're dealing with OTC, how you will know that you're actually dealing with P2P. So I'll allow Philip to do some justice to that.
Okay. Yeah. Thank you, DG. And Solomon, I would keep that question. I think in coming in subsequent slides would actually go deep into that. So it could be OTC, it could be different businesses. So we'll go into how you be able to identify that. Yes, I guess I'm clear now. So let's get going. Yeah. So basically, what do we do at Chainalysis? We are the global leader in blockchain compliance and analytics. Work with compliance analytic investigation partners across 75 countries and territories. We largely work with our partners on both sides of the industry. So that is the public sector and also the private sector. On the public sector front, law enforcement agencies, partners in defense and intelligence communities, tax agencies, financial regulators, and others. And on the commercial or on the private sector end, we work largely with financial institutions globally. This is the largest scope of our partners. And then, of course, we have the fintech firms, the digital asset firms, and all the others. Now, these are a few of the partners that we work with on the private sector side. So mostly a lot of banks. A lot of the work we do with these banks, I think, is largely the main thing that we'll be discussing today, which is helping financial institutions in Kenya understand and estimate their risk exposure or their overall exposure to the crypto asset space. Now, these are a few of the public sector partners that we work with. Largely, the relationships are on a more larger level where we work with them to understand the overall national exposure to the industry in terms of transactions coming in and transactions going out. Which countries are they coming from? Where are they going to? What is the volume? Which part of the countries are which specific assets coming in and all that. So we largely work with both partners on the public sector and then also on the private sector end. Now, I think did you spend some time here? I'll just quickly mention that we've been engaging with a couple of banks in Kenya. Also had quite a couple of engagement with the CBK. I think looking at where Kenya is in terms of from the regulatory landscape in crypto, and comparing it to your peers in South Africa or quite recently in Nigeria, and also sorry, there's a question. Now there's no regulatory framework for having reporting. Okay, I think I would attend to this question a bit later on. I think you could put the questions in the chat. I'll just attend to when we get to the question section. Yeah, so I think from my understanding, we know that the Kenyan banking system is in level 0. So as Deji mentioned, this is where you educate the team, you train the team, and also what some banks have decided to do even before there's any central bank guidance or central bank, I'll mostly call it a directive, is internally to assess their risk exposure to the space. So I know some banks in South Africa were doing this before SARB released the public notice 2 years ago, encouraging them to publicly speak to crypto businesses, where internally they started understanding or having some kind of framework to know what is their overall exposure to the space. Now, looking at, I think Deji made a really good point in terms of having conversations with a lot of banks and then the various bankers saying that they didn't have any exposure to crypto. This is a conversation I have experienced from the Nordics to the Middle East. I mean, it cuts across, right? It's the same thing. Every bank, the first conversations we have with them, the first thing they say is that, Philip, we don't have any crypto product. We are not doing custody. We are not doing any buy, hold, and sell. We don't actively bank crypto businesses. We don't sell crypto on our platform, so we don't have any exposure to crypto. So as we begin the conversations and then we continue to work with them over time, they now get to realize the scope of exposure that they have to the space. Now, with the level of growth that is happening in the crypto space, I think it becomes an impossible task for a bank in 2024 to still think that they don't have any exposure to crypto. That is the plain fact. Now, if you look at the total number of transactions that are happening on chain, there's normal blockchain transactions happening. We have, I mean, this is approaching $4 trillion in transactions. If you then come down to the more of like the following market cap of the entire industry, currently we are sitting at roughly $3.3 trillion market cap in growth. If you look on the institutional side, on the ETF in Europe, in the US, on the ETNs and ETPs in Europe and others, daily we are reporting hundreds of millions of dollars in volume. There are a lot of Africans who don't have exposure to this in Africa, who are using their credit cards and others to purchase or have exposure to these assets in the European and the US market. That is just one part of it. There's a whole different sections that I think would go to in terms of how banks have exposure to the space. Now, analyzing the illicit activity or the illicit flow of, what is happening in this space, we've seen that over the years, there has been an uptick in the level of illicit exposure that largely people are having in terms of crypto. But what we've seen is if you juxtapose it to the overall volume, it means that the total percentage of this illicit volume is quite less. So in terms of the number of incidents is increasing, but comparing it to the volume of adoption of crypto globally is less. So quite similar to a similar case we did with the bank in South, mostly in Southern Africa, they realized that majority of their crypto exposure is actually coming from regulated and licensed crypto businesses. But the first conversations we had with them roughly 6-7 months ago was they had no exposure to crypto. And now they realize that, well, they have quite a lot of exposure, but the good thing is roughly over 96% of this was coming from crypto exchanges, crypto platforms that had KYC, AML, had license in 1 or 2 countries, and it was just a remaining percentage that they had to look a bit deeper into. Yeah. Now, coming down a bit closer home, so a bit more closer to the region, we've seen that there's a drastic uptick in stablecoin flows and stablecoin transactions across the sub-Saharan African region. Now, the reason why this is happening is, of course, there are people who would buy the meme coins, or there are people who would buy the ICOs hoping to probably mostly gamble, hoping to make a lot of returns. But what we've seen is there's an increasing number of people who on a monthly basis are paid salary in Ghana cedis, in the Naira, in the Zand, in the Rand, in the Kenyan shilling, and on a monthly basis would just convert 10, 15, 20% of their salary into stablecoins. So they don't buy the Bitcoin, they don't buy the Ethereum, they don't buy all the assets hoping that the price will go up, but they are literally, in quote, just having more of like a dollar account in their wallet, just 10% of the salaries into Bitcoin. And we've seen that this is on an uptick across the region. The next thing we've also seen what is happening with stablecoins is cross-border payments. I mean, I have personally spoken to used car importers in Kenya, well, the payment processor that processes these funds for them, where these guys would pay their partners in Japan and South Korea in foreign currency many years ago. But 2 years, 2.5 years ago, these partners started giving them the option of making payment in stablecoins. Why stablecoins? Because within 5 minutes, they receive the funds. It doesn't take weeks. So these are used car importers in Kenya who have access to Kenyan shilling, would give it to payment processors, or will give it to some of these, let's say, more of these like remittance companies. All these companies bank with your banks, and then they also then have account with crypto exchanges based in Europe, convert this shilling on OTC platforms in Kenya into USDT, put it on these European exchanges, and transfer the money to the partners in South Korea and Japan. So this is, I mean, these are some of the things that are contributing to the growth of stablecoin adoption. So I always tend to be a bit surprised when even in 2024, banks are still saying that they don't have any exposure to crypto. So these are some of the few things that are driving stablecoin adoption. And of course, what you see here is the less than $10,000 volume. This is what we are seeing per country. So in Ethiopia, we are having a conversation with IMSA now, their government agency, to understand these flows in Ethiopia. In Mauritius, with the FSC, and a couple of these countries in Uganda, with the FIA, and a couple of these regulators, to understand what is the actual volume and what is actually happening in their countries. Yeah. Now, when coming back to the concept of banks and crypto exposure, I think I wouldn't spend so much time here because a lot of this is actually seen in the POC and the POV that we actually conducted with a couple of banks, which I actually have we actually discussed on the call. So basically, we are seeing an uptick in people using stolen credit cards to make payments. Exposure that we see across the African region is on the downstream. So the partners that the banks have, correspondent retail payment processors who have an immense exposure to crypto, and most of the banks actually have no idea about. And this is what we help the banks to understand this exposure. Yeah. Now, I'll probably, this could be, I mean, we are quite a lot on the call. So this would be more of like an uptick or a downtake. That do you feel your bank, or do you feel as a compliance lead in a bank, you have enough visibility on your crypto asset counterparty risk as an organization? I mean, not for comment, but it will just be an uptick or a downtake. I want to have an understanding of where we are currently on the call. So as a bank, maybe I'll just ask the question again. So do you feel that currently in the systems that you have, it gives you enough visibility on your crypto asset counterparty exposures? I guess there's no comment. But we'll probably take a lot of this also in the comment section, or probably in the question section. Yeah. Now, I would typically, we always showcase some of these websites, right? I don't know if any of you are quite know any of these websites from your compliance activities, but all these are platforms and websites that everyone globally has access to. Now, these platforms, they have no KYC, no AML processes in place. They are largely platforms where you can just go with your debit card, credit card, stolen debit card, stolen credit card, and then you just conduct a transaction on these platforms. To give an example, this is one of them, cashbank.pro, right? You go on this, it's mostly an Eastern European platform, and you go on this platform with any credit card or any debit card, and then in real time, you can just convert some amount of money into crypto. That's it. In fact, bringing it down to Kenya specifically, so we had this, I'll probably just showcase this slide to you, or this website to you. I hope you can see my screen. Yeah. This is how extremely easy it is for anyone to have access to crypto, right? So you could come here, you could choose which, let's say this is Nigeria. I mean, let's just say we are referring to Nigeria. You could choose Nigeria, and then it gives you, let's see what we have here. yeah, it gives you the option of, is it a bank transfer or is it a debit card or a credit card? You choose a bank transfer, you get the information there. You choose a debit card, you put your information there, and that's it. It's the same. I've done this with, I've tried this with banks in Kenya, with banks in South, and they are all extremely surprised how just with like a debit card, you could just buy $10, $15, $2,000, and you could continuously keep doing it. I mean, every week and have exposure to the space. So coming back to Kenya, yeah, so you just choose, you want to buy it in Kenya, you have mobile money, you have your debit card information, you continue, you choose how much shilling you want to buy, you choose the asset you want to buy, and then you just make your purchase. Within 3, 4, 5, 10 minutes, you get your crypto in your wallet. So the bank would have an exposure to this platform, but the bank would not then know what happened to the crypto after it got into my wallet. And that is where organizations like Chainalysis comes in, where we help the banks understand, one, your overall exposure to the crypto space, and two, when the funds left or when the funds got into your customer's wallet, we can then come in, of course. I mean, so there's a case of a bank in South Africa where they are now even going a step ahead to directly reach out to the customers and ask them for the exact crypto address, because they have the tools in place now to track where that crypto was made or where that transaction was sent to after the debit card was used or after the Swift message was received. So, I mean, that's how more of like easy it is. I just wanted to showcase this to you in terms of how easy it is for any bank anywhere across the African region to have exposure to the space or to have exposure to digital assets. Yes. Now, let me get back to my presentation. Let me see where we are. Okay, yeah. Okay, I hope you can see my screen now at Cashbank Pro.
Yes, it's clear.
Awesome. Yeah, thank you. Yeah. So again, I mean, I'll just quickly go through this. So a basic example of what we do is most banks today, particularly in Kenya, do not have custody solutions because there's no regulations yet. You don't have buy, hold, and sell. Customers cannot use your bank app and have exposure to crypto. No. There are other African countries where that is where they are. I mean, in Kenya, literally in countries where banks think that they don't have any exposure to crypto, the question you should ask is the Swift messages coming in, the debit card transactions going out, the payment processes that we have on our platform, the fintech organizations that we have on our platform, do these have exposure to this? If the answer is no, then I think you are probably the best bank in the world that has completely zero exposure. If the answer is yes, one, you have to know it, you have to understand it, you have to see where it falls in the risk ratio in terms of your risk exposure as a bank, and then now start to triage and analyze and monitor that exposure. Yeah. Now, I mean, I won't go so much into all this. I mean, yeah. So basically, what we do, there's a question in terms of what does analysis do. What we do is we would give you our off-chain data. Now, this is data of cryptocurrency exchanges, service providers, OTC platforms, payment processors globally. And this is their legal names, their category names in Chainalysis, the websites, the countries that they are primarily, their primary location, all the different countries that they are registered in, and all the legal entities in all those different countries, all the countries that they are licensed in all the various regulatory agencies in these countries, all the countries that they are allowed to operate in or they allowed jurisdiction, the services that these providers have on those platforms, and the KYC details that these services have. Now, you have that data because from experience, we've done this with banks in Israel, with banks in Europe, particularly across the Mediterranean. Banks, I mean, legally, no bank would give its transaction data to any tech company. So we would give you our data, the off-chain data. Our tech team would help your team normalize the data in any format that you want to receive the data in, and then you screen this data against your transactions. And then you start to see the hit in terms of which Swift message, which debit card transaction was actually coming to or going to a crypto service. Now, once you get this specific hits in terms of you get to know Well, you conduct this with the past 6 months of transactions, or you conduct this with 2023, or we're getting into 2025. So let's say with 2024 transactions, our team, led by myself, will then work with you to analyze these transactions. Again, with all the data being kept by you. So due to GDPR and a lot of these data consents, we as a company don't handle any form of the data. You have all the data. We help you once you conduct the screen to analyze and have a complete understanding of your exposure to the space. So I'll give you a clear example. There are multiple cryptocurrency exchanges. A clear one could be Kraken, right? So Kraken is one of the largest cryptocurrency exchanges globally. When I was studying in Finland, and regularly every 2 weeks, doing student jobs and buying crypto, $100, 100 euros, 150 euros every 2 weeks. Now, the company's name is Kraken, but when I'm sending a transfer into Kraken in Europe, the name is Payward Limited. It's not Kraken. So when I started working with analysis and working with the banks in the Nordics, most of the banks typically would do like a Google search, would have all the names of the 20 biggest exchanges, do some kind of like a fuzzy match and all that. Now, a lot of these banks would be screening for the name Kraken, but you'll never find Kraken because in Europe, the name is Payward Limited. So if you don't have this data to know that the name of Binance or the name of Kraken or the name of any exchange, that is a trading name, the registered name in your country could be completely different. I'll give you a clear example here. So this is Binance, right? And Binance is registered in multiple countries. They have licenses in multiple countries. Now, in South Africa, we ran this test with a couple of South African banks where we asked them, so in your matching, what name would you look for? And yeah, we look for Binance, which makes sense. I mean, you would agree with them. But in South Africa, the name is 5 West OTC. It's not Binance. So if you're looking for Binance, you will never find Binance. So this is, I mean, and there's many of this all over. I mean, we just took this as an example because I just got off a conversation with our colleagues in Standard Bank in South Africa. But this is quite a lot. So this is entities that Binance is registered with in various jurisdictions, right? So in Singapore is Swipe Technologies PT. There's nowhere Binance in this name. There are a lot of other organizations like that in various other African countries without going specific into the nature of the work we are doing with various banks across the region. So this is just to give an example. I think there was a question in terms of the OTC. So Solomon, that we give you the data, you screen this data against your Swift messages, debit card transactions. I mean, we would again work with your team in terms of how you could normalize this data, what type of format you want to receive the data. That is mostly our team or our product team working with your tech team or your engineering team from your side. Format where you want to receive the data, we share that with you. And then we run this POV. So what we are doing across the Middle East and Africa region is typically from our conversations, most banks, I think they mentioned this point much earlier on, from the onset, as soon as they hear the word crypto, the default position is banned, which is actually quite wrong. So what we are doing is we are providing this as more of like a proof of value to banks across the Middle East and Africa region where you don't pay for it. There's no commercial commitment to this. Within a 3 months, initially it was a 6-month duration, but quite a number of banks have, I mean, we are quite tied to that. So we've reduced it to within a 3 months duration starting from February, because our next POVs, the complementary POVs are starting in February. We give you this data within 3 months, you run a screen, and we've seen that you will get a hit. That is something that you would get, and you'll be surprised with the names of the fintechs registered in your account, in your books, and their exposure to crypto. But you would also then see that an overwhelming majority of this exposure is actually exposure coming from regulated, licensed crypto businesses, many places all over the world. But the reason why we are doing this is we want you to understand that as a bank, you have an exposure. and then decide on the next steps you want to take to manage it, closely monitor it. So, I mean, that's why we are doing this complementary POV. So, again, there's no commercial commitment attached to it. We would work with your team, have the training webinars, show you how you can manage and handle the data, conduct the screen. It's just a matter of the banks working with the KBA and also our partners, A&D Forensics, letting us know those who are interested in running this more of like exposure analysis internally. Now, again, I think we've already discussed all this. I won't go so much into all the tools and everything. But now the question comes is, okay, Philip, once we conduct the screen and we start to see the hits, what then do we do? Because conducting the screen, seeing the hits is one thing. Now, your next steps in terms of once you start to see where your transactions are coming from is more of like the next action, right? The next thing you have to do. So that is where now using, I mean, something basic. The plan today was to showcase the tool to you, but to be honest, I think with how foundational the Kenyan banking system is, and I'm saying this because we have a lot of relationships with banks across the African region, and we know that banks in different countries, again, based on the regulations in those countries, are far a bit more advanced. There are banks today in some African countries where they're actively building crypto custody solutions. They are building buy, hold, and sell on the bank app because they have the blessing of the regulator. Yes. So once you have that, the hits, and you have the exposure, this is where Chainhouse's entity risking will come in. Entity risking is basically a 10,000-foot view of digital asset data and VASP. So we call it more of like VASP risking. So virtual asset service providers risking. So this is where, if it is an example, if it is, let's say, Yellow Card, if it is Luno, if it is Binance, if it is Coinbase, if it is all this, you just type the name, and then in real time, you get to see the exposure, the counterparty exposure, the transaction, the volume, and all that. If you want to go a step further, and then you start to now reach out to these specific customers, the address, again, we can also help you with that in terms of the reactor tool. But I don't want to go so deep into the tool because I think this is quite foundational and this is quite introductory. So it's just for you to know that we have this proof of value, off-chain data. We're helping banks across the Middle East and Africa region understand and have more of like an assessment of their crypto exposure. So it's something that is up for Kenyan banks if any of the banks are interested in this activity from February next year. I mean, again, the benchmarking, the counterparty analysis, all these would come in after the off-chain data transaction has already been done. Right. I want to run you through a case study that we did with a bank in Spain. So this was our team in the Mediterranean region. We did this case study. Again, we are unable to, yeah, so I mean, so this is one that we built, our team internally built for Standard Bank. I mean, we are just still in the discussion stage with them in terms of helping them understand all their South African rand, foreign currency exposure to crypto, right? So I won't spend so much time here. Yeah, but just to give an example of the work we did with a bank in Spain, I think that was in the summer, in July or so. So we gave them all Chainhouse's data, normalized the data according to their tech infrastructure, ran the transaction, and they took their 2023 fiscal year transactions, Swift messages, debit card, credit cards, and all that. And then they just ran all this screen, almost 97 million transactions across against the Chainhouse's data that we gave them. So this was national transactions, international transactions, received, everything, issued, received, and they just ran the screen against our data. Now, what, I mean, again, this is, we'll go a bit deeper. Our team will go a bit deeper with your team, but I think this is more of like high level compliance discussion. So they screen it against beneficiaries, they screen it against order, they screen it against reference messages, screen it against IBANs and all that. And then of course, the result and the hits started coming through. So initially they saw roughly, and this is a rather small bank, they saw roughly 7,712 transfers related to cryptocurrency transactions. Out of the 7,000, this was roughly 44 million euros of transactions that were connected to crypto activity. And one key thing that I remember from our discussions with my colleagues in the Iberia region was This bank was adamant that they have no exposure to crypto. Like various leaders in their compliance organization was this engineering resources and the tech resources and the compliance resources to do this would be probably used somewhere else, because they were quite adamant. They don't bank any of the big names that they track. They don't do any crypto services themselves. The board has disapproved of them entering into crypto in any way. So they have zero exposure to the space. The only thing that pushed them to do this was because we offered this to, we're offering this to European banks, again, complimentary, just do it, understand your exposure. This was the only thing that more of like pushed them to do it. And then they got this exposure. So out of this 7,000 transactions, roughly 254 were risky transfers. Again, 53 of these accounts were connected to high volume transfers, which are coming from EMIs. And then out of all this, they were able to file 8 suspicious transaction reports. In Spain, it was SOS. That's how they call it. Now, from this, a report was generated across the chain. It went into the Kenyan system, being on the ground with them, analyzing how they could actually input this in their compliance framework, where they run the screen every 6 months. Because with the nature of the data that we give you, you don't run this every week. You don't run this every month. You do the POV first, but when we are getting into a long-term relationship, you can decide to run this on an annual basis, or you can decide to run this on a 6-month basis. In Q2, late Q2, Q3 next year, due to demand we've got from a number of banks, we are building APIs where we no longer give you a file, but we just have an API integration, and then you can just screen specific transactions that you probably want to look deeper into, or you can just screen a class of all your transactions. So I would basically end here. This is basically the main idea of helping banks understand their crypto exposure, and then take the right steps to either manage it, mitigate it, and others. So more than happy to take any question that I probably skipped. If there was any question in the chat, questions, but more than happy to take any question that the team may have. Thank you.
Thank you so much, Mr. Philip. That was so insightful. I think at a point I was like, "Whoa, this is a whole lot." I could imagine the participants. I just hope they are not lost somehow. But then this is an opportunity for you to ask questions. Before we go into the questions, I would like you to type one thing you've gotten, one new thing you learned in today's session. You can just type it. Tell us your participating bank, the name of your institution, and type it in the chat. Let's see in the next 10 seconds. 1, 2, who are the fastest fingers? 3, 4, okay. 6, 7. Nobody learned anything new. You could win a gift. 8, 9, going on. That's somehow nobody learned something new. Okay, so we can take the questions now. I think so far we have one question from, okay, 2. One from Robert, which you've read before now, and then the second one from Cynthia. So feel free to type your question, or you could want to maybe raise your hand, but then let's type in the question so we can be very fast. So Mr. Philip, do you mind answering the first question from Robert now?
Oh, sorry. Yeah, sure. So let me I think this is a question from Cynthia, if I'm right. Just trying to see if there's another question ahead.
Yes.
Let me see. Okay, so there's okay. So the question is about the email reach out. Okay, and the next one is, now that there's no regulatory framework for reporting, what do you normally do when you have suspicions on potential, terrorism financing transaction? Interesting. Yeah. So Robert, thank you very much for this. I think this is the challenge that a lot of the crypto businesses have been facing for multiple years. We've had cases where they receive transactions coming in from, let's say, sanctioned jurisdictions or sanctioned entities, and they reach out to. I think this is a case a lot that I hear about in Nigeria. So they reach out to Nigerian regulators or the Nigerian law enforcement agencies, and sometimes 6 months to a year, there's no response because the regulators or the law enforcement agencies don't even know how to even more of like handle this request. So what these exchanges then do is they would then reach out to be it European law enforcement, UK law enforcement, US law enforcement, on direction in terms of how to handle this exposure. Now, bringing it to a bank, again, at Chanel says we always told not to give advice. It's always to give best practices, because every bank has different risk appetite. So I think the first thing to do is conduct the screen first. Conducting the screen and identifying that risk exposure. Again, the risk appetite of a crypto fintech company is completely different from the risk appetite of a whole bank, right? So there are some banks I have seen that in the Chainalysis platform, and these are like banks in our region, like most South African banks, where in Chainalysis we have low risk, medium risk, high risk, and severe risk. But for most banks, it's two things. It's either low risk or it's severe risk. They don't have time for medium risk or high risk. So it largely depends. That best practice would be reported to the necessary or the law enforcement agencies in your jurisdiction. That is doing more of like the first step. If no response, I mean, I'll be quite surprised if there's no response from Kenya actually. But if there's no response, I think that is where probably, at least from what I've seen across the region, reaching out to the jurisdictions that have either sanctioned that entity and being proactive and reporting to them that, hey, we've received this transaction coming from this entity. What would you recommend that we do? Because we've reported it to our local authorities, and for a couple of months there has been no response. So, Deji, I don't know if you have any response to this question. I think it will largely depend on different organizations. Yeah.
Yeah. So thank you, Sir Philip. So the approach that I've seen, most especially, and I agree with what Philip just mentioned now. There's actually a crypto exchange we have trained, and so he understands compliance and risks. And now immediately after our training, he started bombarding the financial intelligence unit with reports. So he started first with there's a segment they call section against money laundering. They call it SCUML in the EFCC. So every business have to report, have to register with them, every business, including ourselves, so that you are undertaking not to finance money laundering, for example. And then you have the commitment to report any money or any suspicious activity that happens. So this fellow, his exchange kept reporting, and he showed me the email, and I was amazed. And what they say, hey, there's no regulation. Stop sending us these activities. And the guy was shocked. And so we just knew there's a big problem. And so that is why you can easily melt into gray listing by FATF, because again, crypto risks and reporting is part of the things that countries must make sure that they are able to mitigate and assess their risks to start with. So we have to do the national risk assessment, and we begin to tell them, look, even if you don't have the framework, we can work with you and financial intelligence unit. And that's mostly the biggest thing we have discussed at the SMLAG meeting the last time, to say, look, you have to give this framework. If you don't do this crypto risk assessment within your country to also know how you can do the best risk-based supervision of these exchanges within your country, you'll not be able to come out of the gray list. If not, maybe you even shift to other blacklists and all that. So now we now currently have the Nigerian Financial Intelligence Unit, for example, have worked and brought out a schema within the reporting framework for crypto exchanges to be able to report. So now we're working with them to say, okay, these are the things, this is how to throw in the suspicious transactions. We also, like we mentioned some couple of weeks back, we're training compliance officers of different banks, and we said, these are the things you need to do. And we brought in the financial intelligence unit to tell them, this is exactly what you need to do. So I believe at the last time we were with the head of the Financial Reporting Council in Kenya. So the FRC also is doing a lot of activities to make sure that this is happening. So when you have, I think you need to report, you need to keep it in case of anything, you need to actually identify this risk. So that's why I think we should take advantage of the risk assessment window for this couple of months. Let's sweep our whole transaction to understand first, even the risks we have within our ecosystem. But yes, with or without regulation, you need to report suspicious transaction.
Yeah, I think there's another question. So again, so this is based on your experience as a bank, we want to retrieve data from our customers on their exposure to crypto. Is it prudent to directly ask them to provide this information to us without invoking a fear or sentiment that they are red flagged or further screening? Being at level 0, how best can we retrieve this data? I think Cynthia, thank you very much for the question. I think the again, not to more of like save us like the ultimate source of truth, but the first step as a bank is to conduct this screen. And conducting such a screen is you don't necessarily need to reach out to your customers for any information. So you have your Swift messages, you have your debit card transactions, you have your bank transactions. And in all these bank transactions, there are messages in the message section. There's a reference in the reference code and all that. You screen all this against the data that Chainalysis will give you, and then you start to see the connections between which customers, which transactions, which service, which day, and all that. If you conduct this, the point to which you reach out to a customer is where you will probably then fully confirm that, okay, this transaction went into a no KYC exchange. An example, let's say somewhere in let's say in Eastern Europe or anywhere else. And then once we then with you analyze that service and we see an example, if there's a service and roughly 45% of the entire exposure of all that service is coming from darknet markets, and you have a customer who has interacted with that service, then you probably know there's a high probability that this transaction is connected to this. So I think there are a couple of layers before you get to the stage of even thinking of reaching out to a customer. Yeah, I hope that answers the question, Cynthia. Yeah. I think there's another question from Solomon, that the data you refer to provides actual identity and location of the wallet. Does this bring up censorship of? Okay, Solomon, thank you very much. I think maybe just to clarify a few things. So we are not referring to wallets or addresses. We are referring to the crypto services that your bank has a direct or indirect exposure to. I hope you get my point. So in this case, an example, if you take, let's say we take like my friends at Kotanipe, Dennis and Felix and others, right? If you take Kotanipe as a business, or you take, let's say Yellow Card, or you take any exchange, right? These exchanges have multiple assets. Bitcoin, Ethereum, majority of them in Africa, stablecoins. These stablecoins are in various addresses. What Chainalysis does is, for a business, we can tell you all the hundreds of thousands of addresses that this business controls. And collectively, we've used all these addresses to put a risk ratio on that service. So that is what you are going to screen your transactions against, not the addresses. I hope you get my point, because we haven't even gotten to the stage of the addresses yet. Addresses would come in when, as a bank, let's say in 3-4 years down the line, the CBK has some regulations on crypto, or the crypto now becomes like an arms race in Kenya with the bank, like what we are seeing in South Africa today, when you start thinking of which asset do we have. That is where we can go into addresses. But for today, the main aim of this conversation is to help you and your colleagues in other banks to have a snapshot understanding of your risk exposure or your overall exposure to the crypto space. Yeah. Any further questions?
No further question.
Yeah.
Thank you so much.
Thank
Okay,
you.
so at this point, I want me to say that all these might still sound high for you. We understand that a lot of persons might not even understand what wallets are, how to do compliance in when it concerns crypto or digital assets. You are still in the traditional finance compliance. We understand that, and we are here to actually assist you. So if you know that you need further training on this, you can always reach out to us through our A&D Forensics East Africa lead, that's Mr. Stella Whiteleaf, to indicate your interest in our trainings. Specifically, we've trained a lot of banks on crypto compliance, on how they can navigate from traditional finance compliance to crypto. The last one for the bank was First Bank of Nigeria, which happens to be the Nigerian oldest bank. All right, so you can also be part of this. And the name of the training is called the Certified Cryptocurrency Compliance Specialist course. Okay, 3CS. You can actually take that. And don't worry if you don't understand anything about crypto, if you don't understand anything about blockchain technology. We're going to make sure we take you from the foundation to where you should be. And when you are now interfacing with Chainalysis and with your POC, you'll be able to understand better. All right, so if we don't have any question, I would like us also to take a moment. It's not going to take 1 minute to give us your feedback of this training. Let us know what you loved most about the training. Let us know what you want us to do in the next one, what you love to see. There's a link in the chat box. Kindly click on it and take a few moments to answer that. So I will just give 1 more second to see if there are further questions. So do we have further questions or from the audience?
And maybe just to add that for banks that are actually looking forward to running this risk assessment, can go. We will connect all the details from Mr. Ken, and Mr. Ken will also let us know the banks that have indicated those interests to actually sweep their systems for all those crypto risks. And then we'll work together with Chainalysis to make sure that that POC you're brought in. And this is happening globally for different banks. And so it is great that you actually signify that interest and be keyed in so we can obtain a slot for you, because there's a lot of work first. And then we can now take it off from there. I think by and large, I think it's a very fantastic time, and we look forward to also hearing from Mr. Ken. I think we hand over to you to conclude for us.
Yeah, thank you, Adedeji and Philip, for that insightful presentation. I really do agree that this has been a good start in having this engagement, and certainly I think we should be having more of these follow-up. I think from our end, from the association, we just want to express our gratitude for your time and of course the facilitation in hosting this webinar. We would like also to request, if it's possible, for yourselves to share the slides so that we can also share with some of the bank participants who are not able to dial in. And then, of course, I've taken note of the request that was made for those banks that are interested to participate in testing their transactions. So I'll definitely be circling back to provide that information once it comes through from the banks. Other than that, we just say thank you very much. And of course, I'll be picking up with Wycliffe to see how we can have more of these sessions next year. Thank you.
Thank you so much.
Thank you. Bye-bye, everyone. Bye-bye.
Bye-bye.
Have a lovely day ahead. Bye, everyone.
Bye.
Bye-bye.